17% improvement in net income or profit in the first quarter. Can I assume these are the same growth rates we'll be looking at for Ayala Land for the rest of the year?
Well, we've been pleased with the results of our first quarter. We are now on our 33rd consecutive quarter of double-digit net income growth. And the growth has primarily been broad-based. Residential has been growing quite nicely, as well as our commercial assets, shopping centers, hotels, and offices. And I think moving forward, expect more of the same. We will continue to focus on our core products and continue to grow that over time.
And just give us a sense of what the domestic market is looking like there. I spoke to some people and they mentioned there might be an oversupply problem. It might be different, I know, depending on the price points you look at, but is there or is there not an oversupply of apartments coming into the market there?
Actually, if you look at our Q1 results, and I think this is not just for Ayala Land, but I think if you look at some of our other industry peers, residential sales have been quite strong. In our own case, we grew it by about 16%. Year on year. Now, in terms of oversupply, I think if you look at the bigger picture, I think the growth has been driven by a few factors. I think one, as you know, the Philippine economy has been growing nicely between 6 to 7% now over the last few years. Secondly, if you look at the mortgage rates, despite the increase in benchmark rates, they continue to be near historic lows. Thirdly, the developers have been quite innovative and quite skillful in terms of coming up with more affordable products as well as more affordable payment terms. And lastly, over the last couple of years, you've now seen more and more international property buyers coming into the Philippines. I think this has really been kind of broad-based and really really supported the growth of the industry now over the last few years. Moving forward, I think if the economy continues to grow at this pace, I think the sector will continue to grow.
And you noted the influx of foreign buyers. We know the types of price pressures that can put on the market. Look at London, look at Hong Kong, Bangkok, and other places. You noted the Chinese made up about 12% of your sales reservations last year. Where does that number go this year? Do you have a projection for Chinese buyers from the total pie perspective for you guys?
I don't have a specific projection, but what I'll tell you what happened in the first quarter of this year. Actually, our international sales went down by about 10% year on year. The 16% growth that you saw in Q1 was primarily driven by local buyers. We grew our local sales by about 23% year on year. So despite the talk about the influx of Chinese buyers in particular, we're seeing really also strong demand coming in from the local buyers.
Now, you recently got into Malaysia. You picked up a fairly large piece of land there. Help us understand what a timetable is for that project.
We're now starting to plan, and the intent is basically to introduce that to the market, over the next 12 months. As you know, we came to Malaysia about 3 years ago. We got a 10% equity interest in a mid-size, property development company. We basically increased that this year, early part of this year. We now own about 66% of MCT. Recently, we appointed the CEO and CFO coming from Ayala Land. Moving forward, the intent is to actually do more projects in Malaysia and hopefully make that company to be a significant contributor to our bottom line in the coming years.
Bobby, one last question on your balance sheet. The peso's been weak. Tomorrow, the central bank in the Philippines, the Bangko Sentral, will likely raise interest rates. It's been on the up. How much foreign debt exposure do you have, and how are you coping with higher financing costs?
We basically do all our debt through the local market. We don't have any kind of foreign exchange debt, so we don't have that kind of foreign exchange exposure. So we're actually well positioned. 85% of our debt has been fixed and will be maturing over the next 10 years. So we're not particularly exposed to any kind of a major or minor interest rate hike. I think we're well positioned. We planned for this over the last few years, so we don't expect any rate hike to significantly affect our plans or significantly affect our bottom line.